Welcome to another video. My name is Nick and I'm a top podder on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. In today's video, I want to speak about USDCAD. Now, why do I want to speak about USDCAD? Because at the moment, we do have quite interesting price action and structure. So as usual, what I will be doing is providing a complete multi-time frame top-down analysis. Starting from the higher time frames, we will then go down on the lower time frames. We will also check what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. Now, starting from the monthly time frame, what we can see is that in all this impulse to the downside, there is one candle not related to the move, which is exactly this green candle here, which means that when the market tested this level, it actually found support at its zone. And now that we have broken below it and we're currently retesting it, this previous support is now turned resistance. And we can see, in fact, how the market has been respecting this level as resistance quite precisely. In fact, we can see how all these multiple rejections were created exactly at this resistance zone. So here on the monthly, we can expect a potential rejection lower. Dropping down on the weekly time frame, what do we have? Now, here on the weekly time frame, we can see how we did have the creation of this M pattern. Now, in general, after the creation of an M pattern, what you want to see is the market go and complete the pattern at the previous support and resistance, and then you want to see a potential rejection lower. And here on the weekly, we can clearly see how the market has already completed the M pattern at the neckline and is currently testing the neckline itself, which obviously is previous support turn resistance, as we have already said. So from here, a potential rejection lower seems quite possible. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci on the impulse leg, which in this case is from this high to this low. And if we do that, we can see how the market at the moment is currently testing and rejecting the 0.32 Fibonacci taken on this weekly impulse that we can expect the market to reject to the downside even more aggressively. So here on the weekly, everything seems quite bearish. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now, here in the daily time frame, things get quite interesting. Now, I had spoken about USDCAD when the market was around this area, creating this double bottom. I made a full breakdown explaining all the reasons for which there was definitely the possibility for a potential rejection higher, and in fact, that is what the market just gave us. And by the way, I will link this previous analysis in description so you can go and check it out for more free education. But what we must notice now is that in creating this move to the upside, the market has also printed this W formation. And as we said earlier, after the creation of a W, like for an M pattern, we want to see the market create a move to the downside to go and complete the pattern at the previous resistance turn support, which is the neckline of the pattern itself. So at the moment, monthly, weekly, and daily are all aligning for a potential rejection lower here for USDCAD. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, we can see how, if we check the data for the CAD, we can see how the CAD has been getting stronger lately. In fact, we went from having, with the last report, a negative net positioning of minus 7.3k net positions, with more shorts than longs from an institutional perspective. In fact, we had 51.6k shorts and only 44.2k longs, to now having a positive net positioning, so more longs than shorts. 49.7k longs and 42.3k shorts from an institutional perspective, with 5.5k longs added with the last report and 9.3k shorts getting closed. So the CAD is getting stronger from an institutional perspective, and a strong CAD obviously should lead USDCAD in creating the rejection to the downside that we would like to see. So how we will be approaching this potential short-term shorting opportunity here with students. Now, as usual, we would be reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we will have to an intraday bearish market. And if the market will shift from an intraday bullish to a bearish market and provide to us one of our valid entries at that point, we would be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete the pattern at the neckline, which is this previous resistance, turn support here on the daily time frame. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.